Omicron, this new super variant of COVID-19, has thrown markets into turmoil. There's lots to talk about what this means for your investments. Let me try to summarize this. First, the big picture. Now, Omicron is a disruptor for sure, but it is not likely to be a game changer. Updated vaccines will be rolled out in coming months, and we will likely have more treatments for COVID-19 too. How will this affect the economy? Well, the reopening process may be stalled, and this will slow down economic growth for a few months. But against that, central banks are likely to delay interest rate hikes. And this is important because stock valuations are impacted inversely by interest rates. Now, inflation may worsen despite the slowing of economic growth because a more infectious variant will cause supply chain disruptions and delay the return of labor mobility. So that's the economic backdrop. Now, how do we position for this? Firstly, I won't join the panic selling. Instead, I would be bargain hunting in coming days and weeks. I see the possibility of a correction of around 10% from levels just before the Black Friday selling, but I don't see a bear market. I would be looking at the most oversold sectors, and I think airlines and oil stocks will start looking interesting fairly soon. For airlines, the reopening hasn't been cancelled. It has been delayed. For oil companies, the supply shortage continues to work in their favor. And remember, OPEC Plus can pull back supply if they see demand affected by a renewed surge in the pandemic. Now, the likely delay in interest rates in the US could trigger a period of US dollar weakness, for which I'd sell the dollar against the major currencies. As an inflation hedge, gold is starting to look interesting again. Now, I see upside for gold as the US dollar weakens and as inflation rises further. Another inflation play is REITs, particularly those with quality properties and pricing power. A delay in interest rate hikes will also be helpful for REITs. This will take pressure off valuations. Then there is China. China's relatively successful management of the pandemic could come back into favor again with the spread of Omicron. Of course, the assumption and caveat here is that they can control the Omicron variant as well as they had previous variants. Further, at a time when developed markets are running interest rates at or close to zero, China still has lots of policy room, lots of interest rates, and lots of reserve requirements for banks that it can cut. And indeed, it may start encouraging fixed asset investments again to stimulate its economy. So I'd be looking at opportunities in Chinese stocks and China-related plays, such as mining companies and even the Aussie dollar. There are lots of moving parts to this, so check out our insight on this on our ProsperUS website.